Hello, this is a tradesight market recap of sorts. This is following trading on Thursday, the 20th of August, 2015. I know I wasn't going to do a market preview for Friday, and this is not a market preview. This is a separate conversation I felt we should have at this point. So, what we're looking at here is I wanted to discuss, sort of follow up on what I had said coming into August, which was that August can be a very interesting month from a trading perspective. Volume tends to be lighter, and a lot of professionals are gone. But with that, you often get very clean moves. And the flip side is, I often encourage people to understand that if you're new to trading and we're working through like our mentoring program where we're helping you day over day looking at your trade blotters and looking at your results and trying to make sure that you're making the right decisions in your trading on a day over day basis, August is actually a decent time to do that because we've had a lot of very clean winners, daily chart breakouts that have worked really well. Intraday patterns have worked. And it's just, a lot of people take August as if everybody else is away, I should not be. And what I try to encourage is, look, the people that are the big money players that are making good money every month, yeah, they take August off, and that's why the volume goes down. But that doesn't mean you need to, especially because in some ways, maybe you lower your size a bit just because of the lighter volume environment. But in some ways, some of the cleanest trading days are in August, and I've had a stellar August so far. We're 20 days in. Not every day of the week is great, but every week so far, we're almost done with the third full week of the month, has had at least two clean trading days with some nice winners. And I really want to focus on the action from today because it was a little bit of a surprise, but I think what it demonstrates is when you're a trader, and especially if you're starting out, you need to try to show up every day and see what's going on. And if by the end of the first 90 minutes of the day, you don't get a good feel for the market, you feel like the volume's light and activity is muted, then you can move on and maybe not do so much. But the only way you know that is by showing up. And so here's a look at the ES front month futures contract in 5-minute candles. And you can see the back end of Tuesday, you can see all of Wednesday there in the middle, and then the gap down that was Thursday. What's interesting is because this is options expiration week, we expect that the back end of this week is going to be boring. The volume has been drifting off. It's been getting lower and lower. We had 3 days at 1.4 billion shares on the NASDAQ or less. That's the three lowest days of the year, really. There's only been two other days prior that had volume lower than that. One of them was that half day around the 4th of July. This is common. This is typical, and I'll pull that up in a minute. Matter of fact, I'll show you that right now. Here's a look at the volume really quick. This is the daily volume chart of the NASDAQ. And you can see the 3 days before this, actually last Friday, Monday, and Tuesday in particular, we're all down in that 1.4 billion shares. It did pick up a little bit on Wednesday, and we thought maybe we were getting the typical options unraveling move, although not a lot happened. Gap down and eventually recovered, and then came back towards the lows. We've had a lot of days that have not shown where the market hasn't even traded its average daily range. But you can see how low the volume numbers are. And if I scrolled back to last August, as I showed in the prior couple of days previews, look at the back end of August, right in the middle of the chart there. The last 2 weeks, volume really drifts off, and it gets under 1.4 billion shares. And a lot of times that means, hey, maybe you're only going to find one or two things to do in the morning and move on. Maybe you won't find anything. Some days will be there, some days it won't. But you show up every day. And what happened today on Thursday was really, really interesting to me because we just haven't seen it in an August for a while. And it gave us what I thought was one of the best trading days we've seen in a while because we've been in such a flat market environment. And so here's what happened. Looking at the futures, you can see that the gap down occurred, small gap down. Initially, when we have a gap, we look for the market to head back and fill the gap. If you look at the day before, for example, never got that. We gapped down, actually just immediately headed lower, so we never had that push to the upside to try to put any long trades on. It wasn't until the afternoon where the market kind of finished out a cup formation, shot up just to fill the gap, literally to the tick, and then came back down near the lows. So on Thursday here, what we got the gap down, and we did start to head up. And I'm going to show you some of the trades we called and what we did during the day. Because initially there were some trades, just like a normal day, where we were able to make a little money on the long side of the market early on, and in the 10 minutes in, 15 minutes in range. But before we look at that, just note that here's what the market did the rest of the day. Is from that point it sold off, and actually market direction as we measure it here went red shortly after that and stayed red for the rest of the day. So if I put our market directional tool up, you can see the 2 candles up after the opening 5-minute candle, and then we fell back down. And the rest of the day, we were clearly under the opening level and the midpoint, and mostly under the short-term moving average. And we had a very aggressive downside day where you just wouldn't be looking for longs. So, I think it's a really interesting case here. Plus, we also saw some other things that were going on. Volume was one of the best days we've had. We did not have what we call here at tradesight a volume warning after the first hour, which means we did trade over 400 million shares in the first hour. That hasn't happened a lot lately. And separately, Apple was down pretty hard and selling off aggressively. And we all know that Apple sort of weighs in heavily on the market, and it just didn't look right, especially where Apple was on the daily chart. It's really breaking down. This is new lows almost for the year at this point, and the lowest close since January. And that's an aggressive thing to have happen one day before options expiration in August. So it was an interesting setup early. And then I'm going to take a look here with you at the advanced decline ratio on the NASDAQ. And what you'll notice is if you look at just the threshold here, we had a negative advanced decline ratio, meaning when we opened on Wednesday, the day before, negative by about 1,200, and it went a little lower, but then came all the way back up almost to negative 400 when we rallied in the afternoon. So in other words, all the stocks sort of ran. And you could just see it building momentum over lunch. The advanced decline ratio was getting better and better, and then boom, the market broke out. If you look at what happened on Thursday, it started out worse. It started out at negative 1,400 to 1,600, meaning somewhere in that range. There were 14, 15, 1,600 more stocks down than up for the day, and it never really bounced at all. Even in that 10-minute area where the market was looking up a little bit, we really didn't see a great improvement in the advanced decline. And negative 1,500 is a big number. That's a lot more stocks down than up. And if you look at the lunchtime action, it was actually getting worse. We made new lows. And that's your big warning sign. And this is why this day gave us some great opportunities. And then in the afternoon, it sold off. And we closed with 2,000 stocks more down than up, which is a big number on the NASDAQ. So we could see a lot of the signs early on. The volume was better than it's a normal trading day in the market. No volume warning, really heavy actions. They were selling off initially Apple, but then everything, Amazon, Google, everything started coming in. And it gives us a lot of opportunities. And so I don't think that you want to, as a trader, miss days like this, because it's a good time not only to make money, but to make sure that your skills are still building, that you can manage trades properly. And so what I'm going to do now is I'm going to sort of walk you through some of the trade calls that we had. And the first two here are right off of our daily reports, and you may not have gotten involved in these because they triggered in the first 5 minutes, and we don't always encourage people to do that. But we were looking to short SanDisk under 53.18, and it triggered in the first 5 minutes of play. But even if you didn't take it, look at how this stock just played out well. It was a nice daily chart breakdown, and over the course of the day, it dropped 3 points fairly cleanly. And then we had the NXPI. This is another one we were shorting under 85.82, also triggered in the first 5 minutes. Another one that went, this one went almost 4 points for the day, fairly cleanly. Never looked back once it triggered. Now, we'll focus on the intraday calls here. We had a couple, as I said early, looking at the long side because we thought markets started to head up towards the gap fill in the sort of the 5 to 10 minute into the market range. So here was Facebook. We look at a long idea over the opening 5 minute candle. It moved up 40 cents or so, enough to maybe grab something and move your stop, and then the second half would have stopped out. We got a couple points out of Google. It went up and filled the gap and a little more. So that's not horrible. So again, on any other day, you'd be like, oh, gap down, market heads up, got a couple of trades off. It's August. If volume ends up light, I made a little money, and I'm happy, and I move on. But we don't give up there. We had an FCX long. This one didn't really work at all. It was a $10 stock. Literally sat in a 20-cent range all day. So this wasn't necessarily super interesting. You wouldn't have lost much money eventually just closing out the trade. We did have an Apple long early that also triggered in the first 5 minutes. We don't really, again, most of those probably would have been skipped because they were the first 5 minutes. But here's where it gets interesting. After that first hour or so, when we really started to see Apple was coming in and we failed that initial attempt at a very feeble attempt at a bounce, then we started finding more patterns intraday, and we had pure market directional support. We had good volume numbers, and we go right back to this trigger on Win, for example, short under 88.38. You can see the low of the day, and there was general weakness on the daily chart as well. There's a lot, you don't, from the one chart here, you can't see where we made the trade call. I'm just focusing on what they did for now. And you can see it when it broke under the yellow line, that's where we go short. It made a move down for you to cover a piece of the trade. We like our trades to trigger, make a move, retest the trigger, and then fail. That's exactly what this did. Never went more than a couple pennies above the trigger. We teach people not to put your stops a couple pennies beyond an obvious stop out point, and rolled over. And then once this thing rolled over, all you had to do was hang on for the rest of the day. There was really no reason to close the trade. We always encourage people to stop out of the final piece of their trade. And the stock went more than 2 points down in the money before it finally kind of stabilized down there. And at some point, you maybe stopped out on that little bounce that you see later in the day. NTAP, this was a nice one. It was a gap up, actually, one of the few stocks that gapped up. This was my call. I liked sort of the flag formation that was forming here for the breakdown into the gap. And, we shorted this one under the 31.43 area. And it went almost a point very cleanly and it never put you in any trouble. And notice that even when it did come all the way back over an hour and a half later, it stalled out right at the trigger because we had the right technical trigger. It was just a lot slower moving. So again, finding the right patterns, a lot cleaner moves, really respecting those levels in August. Here was Twitter, another one that triggered under 26.87. Very clean, solid move. Really no reason to get out of all this thing. All the way until late in the day, it just worked. And again, really good money-making opportunity there. A little bit later in the day, remember, the market's still feeling pressure. There's no signs of bouncing. That advanced decline ratio is getting worse over lunch. We have Alibaba. We shorted under 71. Again, good for almost up to a point at the best spot. Real nice, clean trigger on that one as well. PANW. Triggered short as well. Didn't really do as much here. Took some time. This one I would say just really didn't work out unless you got a quick partial. And then Mobley, MBLY, also triggered short. This one went almost a point as well. So another clean winner, this one triggering over lunch. The VXX, this is an ETF. I don't think we need to worry so much about this one. This is sort of an inverse play, and it never really went anywhere late in the day. And then Facebook, a little short. This is the one I would say that didn't work. So a lot of plays working very, very cleanly with where it's good practice to make sure that you're able to hold on to these trades that are working because they're not really swinging around and stopping you out after they make their initial move. This is what we like to see in the market when it's a little more active and it's not as flat as it's been the last 6 or 7 months. This is a solid trading day right here in the middle of August where you should have made some great money off these calls. So at any rate, I think it's just important for people to understand that just because it's August and you're new to trading doesn't mean you take it off. You should really be focused on the fundamentals that we teach anyways, which is getting into a trade, managing the trade, allowing it to retest the trigger if it does, looking at the market direction at the time, and then trying to let these trades play out. And when they do, and they do absolutely nothing wrong, you've got to be involved, and this turns into a very big winning day. If you can't do that now in August, what makes you think you're going to be any better at it come September, October, and November when the market picks up? So it's really important to do this stuff day in, day out. And I didn't come into today expecting it to be as good as it was. But I was here, and I took advantage of it, and I'm glad it happened. I don't expect Friday to be that great, but that's options expiration itself. This might have been a little bit of the options unraveling move. But at any rate, I do think it's important for people to understand that you show up and trade every day. And this, I think so far, August has been a phenomenal month from a trading perspective, highlighted most of all by this Thursday, the 20th of August. This has been a TradeSight Trade Recap. Charts, as usual, brought to you by eSignal. And thank you for listening.